Good morning. Welcome to Goodwill Commodities. In this presentation, we are going to see how we can trade in Mcx crude oil today. Before looking into that, let us see what happened yesterday and what we expected yesterday. The chart which you are viewing is an 1 hour chart. That means all the single candlestick here represents 1 hour. Whenever I place the cursor on any particular candlestick, you can see the date and time below. These vertical dotted lines indicate the price opening and closing for the respective days. Now you can see this red color candlestick that indicates yesterday's price opening, which shows that the market opened somewhere around 6,800 and 6,380s, which was just below the previous day's price closing. And what we expected yesterday was, we expected again crude has got the potential to maintain its uptrend, and we made a very clear warning about the trend, and we had drawn this downtrend line to guide you about the trend, because we know crude is in a very crucial situation. We had drawn this downtrend line in order to identify if there is any downtrend, and we had included, and we are following this moving average very strictly, and we are following this uptrend line also. Here you can see a type of pattern which is entering into it. So already we had explained clearly the importance of 6,360s, and also yesterday we had crude oil inventory report. So yesterday we made a very clear warning, because this is going to be the future. This particular 6,360 and 6,320 zones will be the future for this particular contract. Now let us see what happened after the price opening. We know that this 6,360 should act as a potential support to push the price higher, because on the previous day, that was on 23rd, the price action, on seeing the price action, we can consider that this is going to be a very key zone. Now after the price opening, there was a drop. Again you can see the price went and tested this high that created along with the downtrend line. So after that it was quite successful in staying that, and it tested the previous day high, but it couldn't stay above this, so it entered into this trend line. That is the importance why we had drawn this trend line also. So after that you can see continuously the price came down and broke this 6,360, this potential zone. So there was a breakdown here initially. So what happened is that the next candle, you can see candle by candle, if you see that I am going to enlarge this. So if you see the next candle, the market just came down and again it went up. You can see the wick or shadow of the candlestick. It went and tested this resistance. Now it is converted into a resistance, and the price was staying within this downtrend line. That is the important reason why we use trend lines very effectively, because when you are confused, because we know that after a very big bull run, crude is struggling to find direction. Whenever in any market, whenever the price is struggling to find any direction, only trend lines are the very effective tools you can use to identify the trend, because this is trend lines also called support and resistance line. We had made it very clear, trend lines are also a part of support and resistance. It is also called support and resistance. Many people misunderstood that only the horizontal lines are support and resistance, and trend lines are not a part of support and resistance. But we use this traditional indicator very effectively, because you should master this, or if you continuously follow our presentation, you will know how we are effectively using the trend lines. And we have drawn this uptrend line also, so that if the price is likely to stay within the trend, it will stay within this blue line, uptrend line. So it will also break this downtrend line. So now the price is taking a resistance. This is going to be a very key area. So again the next candlestick also, if you see that, again the next candlestick, the shadow or wick of the candlestick entered into this key zone of 6,364, the area which we had marked it as a resistance zone, and it took the resistance along with the two lines. It is a resistance line. Now the downtrend line is also finding a resistance. So the next candlestick, you can see the price came down and broke the average also. And also the next candlestick, candle by candle, if you see that, the next candlestick also, the price just gave a bounce back. You can see the single slim leg or wick of the candlestick again it took the resistance along with the trend line, and the major thing is that it broke both the things, the moving average and also the trend line. So now you can possibly expect a failure. So the price came down below this and the trend line was broken. The downtrend line is providing a strong resistance. So the next candlestick, so this is the candlestick where you can expect the next few candlestick, you can expect crude oil inventory report. Now the price is in the key zone, so you can see that the inventory report was about to flash when the price was trading within the key zone, and you can see that the price, once we get the inventory report, the market just found some bounce back. You can see there was some bounce back. This is the particular candlestick. You can we got the inventory report, and you can see the leg, the market provided some bounce back, but it was within below this uptrend line, and it followed this downtrend line, and also below the average, that gave a clear confirmation and pushed the price down. You can see the pressure, a single candlestick straight away drop, and the market dropped heavily and closed around 6260. so this is the importance why we are providing a detailed video analysis how the price will react. So what I'm going to do now is that, so just if you can follow this, how we are using this trend line effectively, always you need to fine tune the trend line. Just follow how I am fine tuning this trend line. What I am doing now is that yesterday I found this is the high, so I am modifying the high. So this is the way of modifying the trend lines. Now I had modified the trend lines to make it into a perfection. Now I will be following this trend line to guide me, this downtrend line. You can see this downtrend line to guide me for downtrend. So now we got everything clear. So I am going to delete this trend line because it is going to be of no use now. The price had broken this. Now our major focus will be only on drawing these downtrend lines. So a downtrend line and the average pointing downwards, a major now this will be acting as the same zone which acted as a major support zone will be acting as a major resistance zones. So now our point is very clear. Crude can possibly, and crude has provided us all the confirmation yesterday that it can go down in this particular contract or coming days. Now you should know the importance of the other major support zones. Whenever you expect something, you should go back and see what had happened earlier in that particular zone. Yesterday the price came down and it tested this 6260. What is the importance of this zone? Now we will go back and see that the importance of this zone. So here if you see on 8th, as I told you, you can see, always see the date and time below. On 8th July the price found some support and resistance in this zone. So on 12th July the price found some support here and that pushed the price higher. So on 16th of July and on 17th of July the market found some support here and that pushed the price higher, and from this area, particular area, the market went to a high of around 6500. So you should not forget this. So that is the importance we had drawn and consider this as a major support zone. The next zone is 6220. We consider this also a major support zone. Why? Because you can see the market found a lot of support in this particular area. So that is the reason, because how you can see that in this particular video presentation we have a practical approach towards training. So we don't use a major technical tools in this presentation, and we will be using only traditional tools which can make you take a very simple decision very easily. So what we can expect today, crude is expected to open just near 6260 or below this, so which indicates the price is expected to open below the yesterday's price closing, which shows that the market has got the potential to go downwards. Now we are saying crude has got the potential to move down, having the two zones which we earlier used as the potential buy zones. Now it is going to act as a resistance zone, and our trend line is going to support us in the future. So this we are using, we are using two support lines and also the another resistance lines called trend line, and the moving averages. So what we expect today, I expect that crude has got the potential to continue its downtrend, and the next zone is 106,160. You can expect the price to reach this particular area if the trend continues, and follow this all the resistance and support very closely. Follow the trend lines. Why we are drawing this trend line, you know that in any charting platform, whatever you are using, you can use these tools, whatever the average we are using, whatever trend lines we are using, how we are following the support and resistance. This average calculation is made and customized for crude oil. So even if you don't have this average calculation, you can draw this line like how we are showing, and you can make use of that in your particular trading platform or charting platform. So let us see what's going to happen during the trading session, and thanks a lot for watching your videos. Happy trading, take care, bye.